One of the biggest challenges we face as property investors is being able to access money to be able to keep doing deals. Often the reliance is we'll go to the bank, we'll get the money from there, but sometimes that can be the worst thing to do because being dependent on the banks can really restrict your ability to keep growing. In this video, I want to show you alternative ways to be able to keep raising money to be able to do as many deals as you want. Hey, if you're watching my videos for the first time, my name is Saj Hussain, and on this channel I use my almost 20 years of property investing experience to ultimately help you get further faster in your own property investing business. Now, when it comes to doing deals and making money from property, there's really two core ingredients that we need. Apart from your skills, your knowledge, your experience, your understanding of how to make money from property, you need to be able to keep finding deals and you need to be able to keep finding money in order to do those deals. In this video, I want to focus on the money aspect. Now, the default thing is we go to a bank, we might get a mortgage, we might get a bridging loan in order to be able to do the deals that we need to do. And that was the case for a long time. When I first got involved in property around 2006, 2007, at that stage when the market crashed, one thing we found out quite quickly, there was an abundant number of deals available. But the biggest challenge that we discovered at that time was funding completely dried up. There was no liquidity in the market. Banks were fearful in terms of lending because the market was still falling. Prices were falling and there was uncertainty of what's going to happen in the market. And that's what we discovered with lenders, whether it's been the economy collapsing, whether it's been COVID or any other situation where there's a little bit of nervousness in the market. What happens is the banks start tightening up the belts, and what they will do is restrict lending, they'll tighten up the criteria, or they'll hike up the rates, making it less viable and less attractive. Now, when you're reliant on being able to access money in this way, this can be quite a problem. So what are the alternatives, you may be thinking right now? Saj, tell us what's the other way we can do this without relying on the banks? Well, the way we've really built our business is by using other people's money. On this channel, I've also done a podcast series called The Big Property Podcast. We did 100 episodes, and one of those episodes, we had 120,000 views on that particular video. That was with a friend of mine, Vanish Patel, and Vanish was talking about the reliance on banks that we have and the problems that can potentially cause. So, for example, when criteria starts changing, there's many things that the banks can do. So, for example, you may have the terms of down valuations, where banks are valuing property less than you'd anticipated, or they might lower the loan to value, i.e. the amount of money you can borrow against a property in the first place, or the interest rate might get increased to a slightly higher rate, making it less attractive in the first place. Now, when the banks are doing things like this, what they're doing is they're really tightening up their criteria, which can make it difficult for us, as I said. My first experience around property investing was finding deals and selling them on to other people. When the market crashed in 2007, 2008, at that time, there's an abundant number of deals available, but there was limited amounts of cash. And the reason the cash had dried up is because the lending criteria had tightened up massively. So this is why we don't want to be dependent on the banks. And what I realized and learned at that time was actually some of the best deals to be done is when you're using private money. So those that had cash were buying up really good deals. I was offering amazing deals at the time and they were buying those deals, but those who are relying on banks were really struggling to be able to get the finance to be able to keep growing. So now when we look at how we built and grown our business, it's really been based on using other people's money. And that other people's money comes in two forms. It can either be a joint venture or it can be a loan. But let's talk about those two different things. So when it comes to using somebody else's money and you're structuring it as a loan, essentially you're borrowing a fixed amount of money for a fixed period of time with a fixed return. In essence, essentially, it's an interest-based loan is what you're doing if you're borrowing money in that way. The alternative way is you do that as a joint venture. Now, with a joint venture, what you're able to do is structure a deal in such a way that it's based on profit share. So you're sharing the risk and the reward as well. So essentially, one is debt and the other one is equity in terms of how these deals are done. Now, my preference is to do equity deals because we do it as a partnership. And that's essentially how we built the business over the years. When you're looking to borrow money from the bank has two key criteria they're looking at. They're looking at the property itself and they're looking at you as the individual. Now, with the property, what they want to do is make sure it's going to be good security. And essentially what that means is if they ever have to repossess that property, they're going to be able to get their money back. They're not going to lose money. They want to make sure structurally it's sound, that you're probably going to be able to get the rent that you're thinking you can be able to rent for that particular property. And that the surveyor is the one that the bank sends out to be able to do that assessment. Then the other part really is you as the individual that borrowing the money. They want to see that you're creditworthy, that if you've got other property that you already own, they want to see you're going to be a good bet to be able to repay your debts. Now, when it comes to credit scoring, this can be a bit of a dark art as well. And I've done a video exactly around credit scoring and how it works, and we'll link that up here for you so you can have a look at that afterwards. But when it comes to credit score, sometimes I'll come across people that will say, look, I haven't got any debt, I don't borrow any money from anybody, and so my credit score should be perfect. Well, actually, it means the opposite, because what a credit score really does, it gives you, the lender, an example of how well you've been able to borrow and repay money on time. And that's what they're looking for. So they're looking for a good credit score as well. They're looking for you to put down a reasonable amount of money. And essentially, all of this is done without you ever meeting somebody at the bank, and often not even speaking to anybody at the bank. It could be done as an online application. It could be a broker that's doing this for you. But in essence, what it means, this is criteria based. And when it comes to criteria, this can only be interpreted from application and forms that have been completed. But when we compare that to working with private individuals, where we've got funding deals for us, whether that's a loan or whether it's a joint venture, when you're looking at these types of arrangements, it's essentially relationship based. And that's the key difference. What they are doing, they are looking at you as an individual, say, can I get to know you? Do I like you? Do I trust you? And that's what they're basing their decisions on. Of course, there's going to be other criteria about making sure the property is sound and the investment as well. In essence, this is about relationships and people. The investors are investing in the individual first and then the property second. I remember watching an episode of Dragon's Den a very, very long time ago, and James Caan made his first investment in the den. So this is going back quite a few years. And he'd been on the show for a little while, but he hadn't made an investment. And then his first investment was that of a dog walking treadmill, which sounds like a crazy, insane idea when you think about it. You think, how on earth is that ever going to take off, and how is he ever going to make some money out of that? But when you read his book and you read his story, and when he talks about why he made that investment, what he saw was something in the individual, and it was the individual he bought into rather than the product, because he knew that if I'm working this individual, we'll make some money together, regardless of whether it's this product or not. And in property, it's exactly the same thing. People are looking to build relationships and work with people in order for us both to be able to make money. When we want to borrow money from a bank, they're very easy to find everywhere. They're on the high street. We talk to a mortgage broker. They'll be able to help us be able to access the funds from the bank. But when we're looking to borrow money from private investors, where are they? They're not walking around with a sign on their forehead saying, hey, I've got funds looking to invest with somebody. And it's a process that we need to go through in order to be able to find the right people to invest with. And one of the most easiest ways to do that is to go where people are already interested in property and property investing and have the conversations there. Of course, I'm talking about property networking events. I'm a big fan of these. I've been running these myself for about 16 years. And we believe it's really important to have an environment where you're with like-minded people and learning and supporting from each other. But this also then facilitates a way for you to be able to connect and start conversations with other people. The Impact Network is a monthly event that we hold at our Birmingham office.
Brilliant event.
Mind-blowing.
Absolutely awesome.
Really knowledgeable. Glad I came. It's been great.
Loved every minute.
The idea being to help accelerate growth for property and business entrepreneurs. We got like-minded people together to learn and network from each other, and also some fantastic speakers. For example, we've had sessions today on scaling and growing your business, having the right teams around you, how to create a passive house in terms of investment, and also using AI to create content. This is not AI, this is a real me. I look forward to seeing you at the next event. Now, there's a right way and a wrong way to do this. And I've seen many times, I've run these events for many, many years, where people come along to an event and they'll look to raise some money, and they're just going around asking, right, who's got some money? Who's got some money? I've got a deal. Have you got some money? I'm looking to raise some money by Friday. And then they come back to me and say, hey, this networking thing, it doesn't really work. I've been looking for some money. I've had a chat with a few people. No one's got any money. And I'm thinking, well, that's probably not the case. There is probably several people in the room that have got funds to invest. I know, I've had conversations with many people myself as well. And the reality is that actually their approach hasn't worked by going up to people like that, because they haven't given the opportunity for somebody to be able to understand why they should work with them. So what we should be doing is thinking about, firstly, our credibility as to why you should pay attention to what you're doing, your experience, your track record, and of course, have something that's interesting that somebody might be interested in investing with potentially. So for example, if you've got a project that's going to be, let's say you're going to do a HMO, which is a lot of the kind of things we do. If you're doing a HMO and you know it's going to be generating £1,000 profit every month, you need a certain amount of money to be able to do that deal. You want some high level numbers that you can share with people when people are asking. So the best way to go networking is when you're at these events is you focus on other people, asking them questions about what they want, what they're looking for. And generally, our reciprocity, people will ask you, what is it you do? What is it you're looking for right now? And say, well, you know, I've got a project right now. I'm looking to speak to people who might have funds or interested in getting a great return on their money. And when you're approaching it that way, you're initiating the conversation. At a networking event, what you don't do is go into full-on pitch mode. What you do is look to create a connection and follow up afterwards and have a conversation. And let me give you a little tip when it comes to raising money privately. What you want to do is look for money when you don't need it. And that might sound strange when I say that, when you're looking for money when you don't need it, is because what you don't want to do is be in a position where you've got that fantastic deal, you need to get the money secured fairly quickly, and you're struggling because you haven't had any conversations, you're trying to frantically ring around trying to get that deal done. Whereas if you've been having conversations with people over a period of time, there's no pressure in terms of you having to close on an investment. What you're able to do is go back to those conversations that you've had, explore them and see who might be a right fit for you. So let me give you some tangible steps in terms of what you can do straight after this video. The first thing you want to do is think about the project that you may want to raise money for. Now, I'm not saying don't use the banks. Yes, you might still want to use a bank in terms of funding that particular deal or funding some of the money from a bank, but you want to start thinking about, if I'm using private investment, how would I approach that? What sort of money would I need? What sort of rate would I be able to pay in order to make it viable? Whether it's going to be a loan, whether it's going to be a joint venture, how is it you can structure it? So you need to get clear in your own head in terms of what you're looking for. And when you're doing this in your mind, you're going through this process, you'll also get clarity whether you're looking for a loan or you're looking for a joint venture partner. When you have that clarity, it's easier then to have the conversations. And I'd encourage you to go along to at least 3 networking events that are not that far from where you are. Just go meet people, talk to people. And hey, if you're anywhere close to Birmingham, you should definitely come to our networking event. And if you're not close to Birmingham, you'll find lots of people from all over the country still come and see us every month anyway. So essentially, distance is not an excuse. You should go out, meet new people, network and connect. And that's how you're going to be able to grow a business like this, where you've got leads of people who might want to invest with you. Now, if you put yourselves in the shoes of the investor for a moment, and we're having this conversation, when somebody approaches you and let's say you're the investor, what you're thinking is, who is this person? What do I know about them? What can I find out about them? You might Google them afterwards. You might look at their social media profile. You might talk to other people about them. You might ask for something that you can have a look at, something tangible. So you want to be mindful and aware of that. So when you are looking to raise money, you need to be thinking about your social media profiles. Are they up to date? Are they you partying on a Friday night, or is it a bit more serious about property and the projects you're doing? Does it show credibility, some track record there, in order to inspire confidence in the investor to want to maybe explore this and take this conversation further with you? The other thing you also want to take into consideration is the Financial Conduct Authority, the FCA, have some guidelines in terms of how you can go about raising money, not necessarily just for property, raising money generally for investments. So you want to be aware of what those rules and guidelines are. And we've done lots of videos on our channel on those. I'm sure you can find those on there as well. But in essence, if you're using money as a loan, you're borrowing money from an individual, that's fairly straightforward. But if you're doing some kind of partnership or equity-based deal, often it is that you should really only be working with sophisticated investors and high net worth individuals, rather than clubbing together lots of small amounts of money, which is called retail investors, and that's also called a collective investment scheme. And it's illegal to do things like that. So you just want to really be mindful and aware what the rules and regulations are. But in essence, when you start, what you really want to be thinking about is how much do you want to raise? What's the structure of that raise going to look like? What's the return for the investor? Why should they want to invest with you? So the investors, they're really interested in how much you're looking to invest, how long they're looking to invest for, what's the return they're going to get, and what's their security. That's the core questions at the back of their mind once they've got over, do I know you, like you, and trust you, in order to explore this conversation further. Hey, congratulations for making it this far in the video. I've got 2 things for you. Firstly, if you're interested or curious to maybe want to invest with me and I want to have a conversation on what that would look like and how that would work, we'll put a link in the description and you can find us there and we can start a conversation there. Secondly, if you're enjoying this content, please hit that subscribe button, give us a like as well, and also drop in the comments what it is that you'd like to see us do more videos on. And just before you go, what I'd say is watch this video next over here, where we focus on how you can negotiate the best possible property deals in order to be able to attract that money. See you on that next video.